Hello and welcome to Smart Dollar Resource, the place where we make your dollars work smarter, not harder. Today we're delving into the insights of a man who changed the investment landscape, John Bogle. His teachings have shaped the financial world, and there's so much we can learn from him. If you're interested in making your money work for you, this is a discussion you won't want to miss. While you're here, please do us a favor and hit that like button, and subscribe to our channel. It helps us continue to bring you content that matters. In the description below, we've included some valuable resources related to our discussion today. We encourage you to check them out. Your support truly makes a difference. Thank you. Without further ado, let's dive into the life and lessons of John Bogle. John Bogle, a name synonymous with smart investing. But who is he? Let's delve into the life and achievements of this remarkable man. John Clifton Bogle, fondly referred to as Jack, was born in May 1929 and lived a life dedicated to the financial sector. He was an American investor, business magnate, and philanthropist, but his claim to fame was his founding of the Vanguard Group, one of the world's largest investment companies, in the mid-70s. Bogle was not just a founder, he was a revolutionary. He introduced the first index mutual fund, a low-cost and low-risk investment strategy. This approach democratized investing, making it accessible to the masses. Before this, investing was considered a game for the wealthy, but Bogle changed the rules of the game. His philosophy was simple and profound. He believed in long-term investing with a focus on broad market indices. He championed the cause of the individual investor, arguing against costly intermediation and management fees. Bogle's contributions to the investment world have been monumental. His dedication to providing a fair playing field for all investors earned him a place in Fortune's list of the world's 50 most influential figures in the business world in the 20th century. But it wasn't all smooth sailing. Bogle faced criticism and skepticism when he launched his index mutual fund. Critics called it Bogle's folly, but time proved Bogle right. Today, index funds are a staple in investment portfolios worldwide. Beyond his professional accomplishments, Bogle was a man of integrity and resilience. He faced multiple health challenges, including a heart condition that led to a heart transplant in his 60s. But he never let these obstacles deter him. Instead, he used them to fuel his determination to make a difference. Bogle's impact on the world of investing is undeniable. But what can we learn from him? As we delve deeper into his teachings, we'll uncover the principles that made him a beacon in the financial world. Stay tuned. Bogle was a firm believer in the power of simplicity in investing. Let's delve into his wisdom. John Bogle was a man of the people, an investing guru who championed the everyday investor. His teachings were rooted in making investing accessible and understandable to all. At the heart of his philosophy were three core tenets: the power of low-cost index funds, the importance of long-term investing, and the futility of trying to beat the market. The first cornerstone of Bogle's approach was his strong advocacy for low-cost index funds. He believed that by investing in a broad cross-section of the market, investors would achieve steady growth over time. Bogle once said, "Don't look for the needle in the haystack, just buy the haystack." This was his way of emphasizing the importance of diversification and avoiding the risk of picking individual stocks. The second pillar of Bogle's teachings was the importance of long-term investing. He often stressed that investing is not about getting rich quick, it's about building wealth over time. He urged investors to stay the course, to resist the urge to react to market fluctuations, and to keep their eyes on the horizon. In his words, "Time is your friend, impulse is your enemy." The third cornerstone was Bogle's conviction that trying to outsmart the market is a fool's errand. He was a vocal critic of active investing, where fund managers try to beat the market by buying and selling stocks frequently. Instead, he advocated for passive investing, where you invest in index funds and let the market do its thing. He argued that the cost, time, and stress involved in active investing often outweigh the potential benefits. Bogle's teachings were not without their critics. Some argued that his approach was overly conservative, and that savvy investors could achieve higher returns with more active strategies. However, Bogle maintained that his philosophy was not about winning the investment game, it was about not losing. He believed that a slow and steady approach would yield reliable returns over the long run. Bogle's teachings have had a profound impact on the investing world. His advocacy for low-cost index funds revolutionized the industry and made investing more accessible to the average person. His emphasis on long-term investing and passive strategies has helped countless investors avoid costly mistakes and build wealth over time. Bogle's teachings have stood the test of time, but how can we apply them to our own financial journey? This is a question that we all must ask ourselves. While Bogle's philosophy may not be for everyone, his teachings provide a valuable framework for making wise investment decisions. Whether you're a seasoned investor or just starting out, there's a lot we can learn from John Bogle. Knowing Bogle's principles is one thing, applying them is another. So how do we take the teachings of John Bogle and apply them to our own investing strategy? Let's break it down into some practical steps. First, keep it simple. Bogle was a huge advocate of simplicity in investing. Rather than trying to outsmart the market with complex strategies and frequent trading, Bogle recommended buying and holding a diversified portfolio of low-cost index funds. These funds are designed to track the performance of a specific market index, like the S&P 500, which means they provide broad market exposure at a low cost. Second, stay the course. Bogle's approach to investing was all about long-term commitment. He often spoke of the importance of staying invested through market ups and downs rather than trying to time the market. This requires patience and discipline, but it's a proven strategy for long-term success. Third, remember that costs matter. One of Bogle's key teachings was the impact of costs on investment returns. He believed that by minimizing costs, investors could maximize their returns. This means choosing low-cost index funds over more expensive actively managed funds and avoiding unnecessary fees and charges. Now let's look at some examples. Say you're a beginner investor with a long-term time horizon. You might start by investing in a low-cost index fund that tracks the S&P 500. You would then commit to regularly contributing to this fund, regardless of market conditions, and hold on to it for many years. Or perhaps you're a more experienced investor with a diversified portfolio. You could apply Bogle's teachings by reviewing your portfolio to ensure it's composed of low-cost index funds and by resisting the temptation to trade frequently or try to time the market. Finally, it's worth noting that while Bogle's teachings are widely respected, they're not the only approach to investing. Some investors may prefer a more active strategy or may want to invest in individual stocks or other types of assets. That's perfectly okay. The key is to have a clear strategy, stick to it, and be mindful of costs. In the end, applying Bogle's teachings is about adopting a long-term, disciplined approach to investing. It's about understanding that investing is not about getting rich quick, but about steadily building wealth over time. And it's about recognizing the power of simplicity and the importance of keeping costs low. As with any financial advice, it's important to do your own research, which leads us to our next point. Looking to learn more about Bogle's philosophy? We've got you covered. There's a wealth of resources out there, but let's focus on 5 books that delve deep into Bogle's teachings. First up, we have The Little Book of Common Sense Investing by John C. Bogle himself. This book is a great starting point. It's all about the value of simplicity in investing and the power of owning a broad portfolio. Next on our list is Common Sense on Mutual Funds, New Imperatives for the Intelligent Investor. Also by John C. Bogle, this book goes deeper into the concept of mutual funds. It's a must-read for anyone looking to make sense of this complex world. Moving on to Enough: True Measures of Money, Business, and Life. This book, you guessed it, by John C. Bogle, takes a step back from the nitty-gritty of investing. It's a reflection on what really matters in life and business, and how that understanding can guide our financial decisions. Next up, The Clash of the Cultures: Investment versus Speculation. This book draws a clear line between investing and speculating, two concepts that are often confused. Bogle argues for a long-term, patient approach to investing as opposed to the get-rich-quick mentality of speculation. And last but not least, Stay the Course: The Story of Vanguard and the Index Revolution. This book is a behind-the-scenes look at the founding of Vanguard and the rise of index investing, both of which Bogle played a crucial role in. It's a fascinating read for anyone interested in the history and evolution of the investment world. Now let's shift gears a bit. Alongside these books, a great resource to have in your arsenal is the broker app, MooMoo. It's an intuitive platform that makes it easy for beginners to start trading. And here's the cherry on top. Sign up today, and you have the opportunity to potentially win an Apple stock currently valued up to $190, plus up to 10 free shares. Remember, knowledge is power. Equip yourself with the right resources to make smart financial decisions. So, what have we learned from John Bogle? It's been a journey, hasn't it? We delved into the life of this financial titan, John Bogle, discovering his background and his significant accomplishments. We learned that Bogle was more than just a man. He was a trusted authority in the world of investing, a beacon of wisdom who changed the way we think about money management. We explored his teachings, the crux of which is the power of simplicity and long-term investing. We learned about the importance of low-cost index funds, the perils of chasing hot stocks, and the virtue of patience in investing. Bogle's lessons have brought us a new understanding of investing that transcends the traditional paradigms, but knowledge alone is not enough. We must know how to use it to our advantage. We discussed how to apply Bogle's teachings to our own financial strategies. From understanding the value of dollar-cost averaging to appreciating the power of compound interest, we've learned how to execute these principles to make our money work smarter. And of course, we can't forget the trove of resources we've recommended. The 5 books that focus on Bogle's teachings are an invaluable repository of wisdom. Whether you're a beginner or a seasoned investor looking for a refresher, these books offer a deeper dive into Bogle's philosophy. Lastly, we discussed the broker app MooMoo, an excellent resource for anyone looking to start their investing journey. Remember, the chance to win an Apple stock valued up to $190 and up to 10 free shares await you when you sign up today. Indeed, every journey starts somewhere, and every investor, novice or veteran, can learn something from John Bogle. His teachings are a testament to the power of knowledge, patience, and prudent financial management. Thank you for joining us at Smart Dollar Resource. Don't forget to subscribe, like, and comment. Check out the links in the description, and until next time, make your dollars work smarter, not harder.